Good morning, traders. Steve Ganz here, and welcome to the weekend update and market analysis for April 6th, 2024. So these are the current open positions in the alert service, and I'm just going to run through them pretty quickly here. So this one is chunking along just fine. I suspect that I'll probably look at trying to close this one out, or at least thin it way out this week. It's had a nice big wide range that this is trading in. And again, it's achieving some decent objectives here from a profitability standpoint. I don't like carrying these too close to expiration because at that point the gamma just gets a little bit too steep. So if you do have a big move, it can basically remove a significant amount of profitability from the trade. This is a SPY trade that had to be adjusted a number of times early on, so it's been a little bit of a challenge waiting for this one to get some profitability creeping into it, but there's only 14 days left in this trade, or come Monday, there will be 12 days left in this trade. So it should start to decay fairly rapidly. I'm not looking to get a huge amount of profit out of this one because of the number of adjustments that it had early on, but we should be able to get some profitability out of this, get this one closed. This one was just recently opened 2 days ago. I think we got a really good opening on this, a great fill. It's a very good reward to risk ratio. This one was able to be opened up because we had a sizable down day where volatility spiked up a little bit, which gave us a great opportunity to get this broken wing butterfly open. And those of you that might be newer to the broken wing butterfly, I do have a deep dive butterfly class that I spend about 10 hours getting into all the nuts and bolts of butterflies, when they're best to open, when do you get the best reward to risk ratio on them, how do you go about adjusting them and up markets, down markets, etc. And we're going to do a lot of that through the alert service here, but it could literally take you a year or more to learn all of the things that get taught in that 10-hour class by waiting for them to play out in real market time. In that class, I take live examples in key market environments like the COVID market, etc., and we go through how to adjust in those dramatic markets. Now, I want you to notice two different butterflies here. So this one was just put on. It has a reward in the 25,000 range, a risk in the 5,000 range. Now here's one that was put on about a month ago, and same thing. It's got about a $5,000 risk to it, but it only has about a $20,000 reward. Why does that happen? And the answer is that we did not have any real volatility at the time this one was entered. It wasn't as lucrative from a reward to risk ratio. So those are some of the things that, again, get deep into the nuts and bolts on that in the deep dive butterfly class. This trade, Apple trade, I am still personally an Apple bull. Apple is having some challenges here, right now, but it's stabilized right down here in this 170 range. I had thought it was going to stabilize in the 180 range, which is why I put this trade on when Apple was trading at 180. Then it quickly broke the 180 barrier, fell down to 170, and it's been hovering here ever since. And there's a lot of time left on this trade, so this trade is decaying very slowly. The reason this trade was put on so far out is that Apple has a conference in June called WWDC, where they are expecting to release a new version of Siri. I think anybody that's in the Apple ecosystem knows and understands that Siri's been kind of not a very good, I guess you'd call it, assistant. And they're expecting to have a complete redo of Siri using a lot of AI or machine learning capabilities. And that could have a significant impact on Apple because Apple also is one of the more secure services out there where they don't share all of those requests you're making, where Google and many of the others do. So I do expect good things from Apple here in that conference, and I will probably be looking to maybe reduce some of this upside risk here over the next few weeks. So I'll keep an eye out on how Apple moves and take a look at that potentially. This trade's moving along great. Again, Broken wing butterfly, my favorite trade. If you learn one trade, if you really get into the nuts and bolts of one trade, the butterfly is one of the most versatile trades out there. And if you learn how to use this one trade and the different ways of adjusting it or putting it on as a flat fly, as a broken wing fly, this one trade can carry you through darn near anything, in my opinion. This is the DJT. When I opened this trade, this was the SPAC for the Donald Trump platform, the True Social platform, and then it evolved into the symbol of DJT. Now, this is not modeling correctly right now because there was a lot of assignments that came in on this, and I am working with Charles, a developer of this software, on how assignments are handled, but I think something's just a little off in this, and I need to get into the nuts and bolts of it. Overall, this trade had very low risk, as you'll recall. I put on a condor, and I sold that condor, oddly enough, for 97 cents with $1 wing, so a phenomenal reward to risk ratio. But I sold a lot of them, and then I started getting assigned short shares. I would have loved to have maintained those short shares because this is not a stable company. It just has no earnings to speak of and is not really growing. So I would love to have maintained short shares, but the brokers would not let me. So I had to cover those. So the bottom line is this thing's kind of a mess from a P&L standpoint, but there wasn't a huge amount of risk in this trade to begin with because I got into it so favorably. And then we have this NVIDIA trade. So NVIDIA, this is a different style of trade that I shared here. This is essentially a skewed condor, and it does have some long puts in it. So if there is a black swan event here, and I have to stress that it's the black swan event that will cause this T0 line to raise up because of an increase in volatility, and that does provide some downside protection. Now, a drift to the downside doesn't really protect for a drift to the downside because in a drift event, volatility doesn't really spike much, so this T0 line would not necessarily pull up into here unless, again, it was a volatile sell-off situation. So this is something I do need to be aware of and I do need to watch in this trade. I need to keep an eye on if this thing drifts lower in here. I may need to make some other adjustments. If there were a volatile event and this thing plummeted, I would be okay because this T0 line would largely lift up here. So that's just something I have to keep an eye on this specific trade. So that's a run through of the current open trades. Now let's take a look and do a little market analysis here. If you recall, last week's weekend update, we were right up in here, and I said my expectation was that we were going to get a sell-off probably back to the bottom of this channel or a little bit further. If it came down further, I was expecting potentially to come down to this 5,100 range. I think I'd said 5,200 as a first stop. And then if it broke through that, probably down to 5,100. And of course, we had this pretty sizable down day here on Thursday. Then we rallied back up, but we didn't break this high. So we're in a little bit of a suspect area here right now where the market may be putting in a little bit of a top because we did make, in this case, we made a lower high right here between these two, and we made a lower low between these two. Now, these are just a couple of days into a possible trend shift. The trend shift really isn't confirmed yet in my mind. If we then have another day that comes down lower than this bar, and then we get a bounce off that and we stay lower than this bar, then I'm looking at, we might be looking at a potential trend change at that point. Right now, still not convinced that a trend change is happening. And if we look at SPY, we'll see similar. We did break out of this channel that has been very well adhered to up to this point. So the fact that we broke down out of this channel as well is also a bit of a flag. Now we pulled back up to the bottom of that channel. So we broke out of the channel, Then when we bounced back up, we came right up to the bottom of this channel. And that is a likely place for this to stall, especially if we're going to start to roll over a little bit. So right now, my expectation is not probably so much of a rollover as I'm expecting maybe we'll start chopping in a sideways channel here for a bit. We might start chopping between in SPY here, maybe this 525 range, of course in SPX that's 5250, down to around the 5100 range or 510 on SPY. So my expectation is maybe to start chopping sideways in that general range. Another reason I'm thinking that, let's look at VIX here. Another reason I'm not as convinced that we're going to break out to the upside right now. Our VIX really spiked here on Thursday when we had that sell-off. But then what's odd is when we had that big rally then on Friday, volatility did not really drop. This was a little bit unusual. Usually if you have a big rally up, you're going to get a pretty significant drop in volatility. Now, maybe people just weren't totally believing that move on Friday, and come Monday, if our market pops up higher and stays up higher, maybe this will drop rapidly, not unlike it did here. Maybe it'll just be a big gap down like this. I'm certainly going to be watching for that to hopefully happen. If that does happen, that will certainly favorably impact a number of our positions. This will instantly have much more profitability in it, as will this, as will this. As soon as that volatility drops out of many of these large index trades, the profitability will show up in there more quickly. So that's what I'm looking for, is for this to ideally drop off significantly. It is a little bit of a concern that it did not do that on Friday. And then finally, let's take a look at RUT. Don't have anything really on in RUT right at this moment, but RUT is adhering pretty darn well to its trend line still. It is forming a wedge pattern. Again, up sloping wedge patterns like this, more often than not, will tend to break out to the upside. But we're not seeing that right now in that SPX SPY index. We're starting to see a little bit of a sideways chop. So we will keep an eye on that. And again, keep an eye on RUT here as well. These two can move separately from each other. But in general, the overall market tends to move somewhat in unison. Certainly, there will be some indexes that are going to be more bullish than others as we march forward. And again, right now, it's been the SPX by far. But again, RUT is also showing some stability here. So that's it for the weekend update here for April 6th, 2024. Take care, everyone. Look forward to a great week.